Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is Brian Beamish. He has been in the gold and silver space for over 30 years, and he's also a former commodities broker and so much more. Welcome back, Brian.
Hello, hello. Great to see you again, Ivan.
Yeah, such a pleasure having you come on to Wall Street Silver. I wanted to get you on to talk about everything that's happening in the gold silver market, inflation. And, first we'll start off with inflation. We were talking earlier before we started recording, like what is inflation actually? You showed me a pretty, an exceptional chart about, that explains it. In your view, what is inflation? Can you show us that chart?
Sure. Let's jump right over this. I suppose let's do a little screen share here. Host as disabled participant
Oh,
screen sharing.
hold on. Let me. Hold
I'll
on.
have your editor maybe cut that part out.
No, it's okay. We'll leave it in. All right, now you can share.
Okay. So I'm going to give you my perfectly candid explanation of why what inflation is as a monetary phenomenon.
Right.
Um, I'm a big fan of Milton Friedman. So as you can see, our buddy Jerry on the screen here and his printing press going. Um, Unfortunately, and what I often see happen, of course, is that the powers that be try to change the conversation. And if anything, they try to disconnect things so that the public doesn't really see what their agenda is. But I
Right.
might argue that inflation is nothing more than a monetary phenomenon. And through the course of the latter part of the baby boomers' working years, and unfortunately, maybe some made up wars.
Right.
Uh, we headed down a path that unfortunately is completely unsustainable, and that is the ever increasing printing of money to pay for all these bills.
Hmm.
The problem there, though, is that you can print more money, but at the same time, too, a loaf of bread is a loaf of bread is a loaf of bread.
Right.
That never changes. It's a physical asset, physical commodity. An ounce of silver is an ounce of silver is an ounce of silver.
Absolutely.
So really, what is price? Price is nothing more than a function of whatever that hard asset is divided by the amount of things that you call money. So if you have 100 things that you call money and you divide that into 1 unit of silver, for instance,
Hmm.
obviously the price of that asset is going to be a lot higher than if you have 1,000 of those things that you're trying
Exactly.
to price the silver in, or 100,000, or 1,000,000, or now, unfortunately, it's gotten so bad that we're pricing these things now in the trillions.
Yeah, insane.
Oh, unfortunately, what ends up happening is this is a slippery slope that you can't win. And I hate to say it, but I do believe that we were put on this slippery slope when the US Federal Reserve Board took over the US banking system in 1913.
Hmm.
And if you'll indulge me, I can show you an image that sort of graphically displays this natural inflationary process that the Fed actually has us on.
Is that the two types of relationships like the bonds?
Well, in simplest terms, this is the course of the Dow Jones Industrial Average,
Right.
and you can think of the Dow Jones Industrial Average as like one of those units, right? It could be an egg, it could be a loaf of bread, it could be an ounce of silver, it could be a basket of blue chip stocks. That
Right.
doesn't matter. This is on a logarithmic scale, so as a result, the image that I just showed you was on a linear scale, right?
Right.
That the money printing. This is on a logarithmic scale, and what you can see is that the powers that be have us on a very natural growth rate. But the problem here is that since 1971, when the Americans took themselves off the gold standard right here,
Hmm.
this inflationary process has just, it's literally gone parabolic.
Wow.
And the problem is that we live in a society now that must grow because governments have given themselves permission to deficit spend
Hmm.
to try and maintain, political stability and all that, guarantee political promises and stuff that they make when they're trying to get elected.
Right.
Um, Unfortunately, what it means is that they have to keep printing more and more and more money, which means that unfortunately we get on this inflationary spiral. And what we saw recently is basically the hyper printing of money, and it got so bad through the sickness. You can see the parabolic nature of this curve that it actually started to become quite noticeable to the public, where they go to the grocery store and that loaf of bread all of a sudden is just doubled in price. Well, it's just
Right.
purely a function of the fact that look at the amount of actual money that they're injecting into the system.
It's insane.
So the point here is, over the past year or so, you notice that the printing, it got so bad. And actually, this is a really interesting commentary. A gentleman that I really like, Stanley Druckenmiller, got very, very upset. I don't know whether you've ever heard of Mr. Druckenmiller.
No.
He's a famous fund manager down in the States, all-star trader.
Wow.
And he got very, very upset at these central bankers for doing what they did through here. And I believe that the bankers themselves got a very loud message from the 1% in the United States.
Right.
Hey, calm down, cool your jets. And as a result, we actually see that the money printing kind of went on pause there a bit in the US. Unfortunately, if we look at a money supply situation for a country like Canada, it's not nearly
Yeah,
as
it's great.
good.
Is
It's
it?
bad.
Yeah,
And
it's
maybe in
bad.
a future conversation, we can look at what this political leader in
Oh yeah, we will.
Canada has done. It's a very bad situation. But the point being is that you can see that we've paused here a bit. The
Hmm.
problem is, though, these guys are completely beholden on the economic cycle. So this happens to be a relationship between inflation-protected bonds and unprotected bonds.
Correct.
And when this ratio is moving up, it means that investors are willing to pay a premium for that inflation protection.
Hmm.
So you can see how, as we said there a couple of years ago, the money printing was absolutely out of control. In 2023, a lot of people in sort of positions of power in the United States said, slow down, banksters. You better get your act together. You're going to blow up our economy.
Right.
And so as a result, you can see that this inflationary push in the United States of America has been put on pause. The last conversation that I had with you, we were heading into this peak and we actually started to top out a little bit. And you can see that since April, this relationship has actually been moving down,
Right.
which is, on balance is good. You don't see the runaway hyperinflation at the grocery store or the gas pump right now. But at the same time, too, this is a very positive number. We are living in an inflationary world right now. Inflation has not gone away. It's just been put on pause.
Exactly.
Why has it been put on pause? Well, if you understand the way that money works and the 4-year money cycles, basically we go from crisis to crisis to crisis. And every time we go through a crisis, the Fed has to dramatically lower interest rates to try and bail out the economy.
Right.
So here was when they dramatically lowered interest rates through the sickness. And this was that hyperbolic printing of money here to try and save the economy. And in essence, we worked our way through the sickness. This yellow line is the 2-year bond, and it's sort of like the market's proxy on short-term interest rates.
Okay.
So bond prices went up dramatically, which means the yields go down. This blue line is that Fed funds rate. So you can see they basically had rates at zero, and then all of a sudden the inflation, right, which is this, right, just went absolutely out of control. And Mr. Druckenmiller, I made reference to there a few minutes ago, got all
Correct.
upset. The bonds themselves, the market's proxy, because keep in mind, the market is way bigger than the Fed. The market will always dwarf any central bank, and
Oh,
most
interesting.
people don't understand that. The
Yeah, I didn't know that.
market itself drives everything.
Wow.
So you can see how the 2-year bond started to collapse in price here, and the
Hmm.
Fed, they didn't actually start raising interest rates, because keep in mind, when this bond collapses, that means interest rates are going up.
Right.
So the Fed, in reaction to this, seeing the bond market collapsing, they what did they do?
They were forced to raise rates.
They increased interest rates dramatically,
Right.
and historically at a very fast pace. You can see, through the dot-com bubble, when it burst, right, and they needed to increase interest rates. Junior Bush and his war there, or wars in the
Right.
Middle East. You can see the raise of interest rates, the slope of that curve. Here was basically Mr. Biden, or excuse me, Mr. Trump, beg your pardon, him bringing the economy back after the GFC, Great Financial Crisis. You can see the pace of interest rate increases here. Can you see how dramatically they raised interest
Yeah,
rates, how
it's
quickly that
insane.
was?
It's
So
insane.
historic pace, like by all means, much faster than they've ever raised rates before. But
Wow.
you can see that they were replying to the bond market. Look
Yeah,
how the
yeah.
bond market absolutely collapsed here.
Right, right. That's interesting.
So the Fed really didn't have any choice. So the question ultimately is, when does the market, which is our yellow line here, when
Hmm.
does the market start saying, okay, we have hit the peak in economic activity, and actually we're starting to expect that the economy is going to roll over? Now,
Hmm.
is it because of some outside influence? Is it because of maybe some questionable lending standards?
Hmm.
Is it because of inflated bubbles? Dot com. I don't know whether you remember the dot com bubble, but I
Not
was a
too
broker
much.
through that. Point here is, at some point, and you do hear a lot of people in the economy talking about, when's the Fed going to lower rates? When's the Fed going to lower rates? When's the Fed going to lower rates? And in essence, they're waiting on the market.
For the market, for the bond market to wake up.
As soon as the bond market starts moving up here, then I think the Fed will be given the green light to
Oh,
actually
that's so
start
interesting.
lowering
What
interest
happens if it doesn't go for another year, 2, 3 years?
rates. Then it doesn't go for another 2 or 3 years. This was a really interesting scenario where you can see that the 4-year sine wave had turned here. And I don't know whether you remember this, but Mr. Trump, he actually summoned Jerry to the White House and gave him an
I
official
remember that.
going over, why do you have interest rates so high? Why do you have interest rates so high? And I'm
Hmm.
sure Jerry just said, well, look, we're waiting for the market to actually tell us when to start lowering interest rates. So this is entirely based on the market. The
Mm.
market will dictate this.
Wow, that's so interesting.
So the point being that, believe it or not, we're actually in the absolute best scenario right now, right at this moment. So I hope you're enjoying the good times.
Well, yeah, hopefully as while they last.
Well, and that's just it. Like in our country, you're in Canada, correct?
Yeah.
Uh, where they've already actually started to lower rates. Why?
Yeah, yeah, that's right.
Well, because the real estate bubble is starting to pop in our country. I don't know whether you've watched, but
Hmm.
wow, there's some serious horror stories out there about the
Yeah.
Canadian real estate market. But I suppose we'll leave that conversation for another day. But the point being that, as you can see from this image, if we go over to the Equity Clock site, and
Hmm.
your viewers, this is a fantastic resource to understand the market from a seasonality perspective. As I said, remember, I'm an old stockbroker, commodities broker, and
Correct.
the commodities industry, they set their watch on seasonality trades. That's just the way that the market works.
Hmm.
So if we look at what actually starts to get going here in July, like the seasonal start point, we see things like a number of different assets. We don't necessarily need to get in all of them. What you really want to see is where's that silver chart. So just give me a second here. Where is all right? And your editor will edit this out.
You also talked about the gold and silver stocks charts before we were recording. Why are you so bullish of gold stocks, Brian?
Okay, let me just finish this image for you,
Sure,
and then we'll jump into that.
sure.
So, can you see here? This is the silver future seasonality.
Oh yeah, I see it.
So we actually had our last conversation like right here.
Right,
So it doesn't surprise me that silver prices had to come off. And you can see the end of June, beginning of July. That's actually when these markets like to seasonally bottom.
oh, that's when
So,
people buy in.
well, more importantly, that vacuum and lack of buying, and then also two things like the Australians actually selling
For their
to
taxes.
book tax loss sales, that ends at the end of this window, and that
Right.
vacuum is released. That
Interesting.
makes sense?
Yeah, oh yeah, that's
Okay.
super interesting.
So moving forward, the point here is you can see from the commodities perspective, a lot of these commodities are all coming into seasonal troughing windows here right now, which
Right.
is interesting because this does mean that over the next couple of weeks, we're probably going to see some sort of pivot in a lot of these commodities.
Right.
You had to avoid the market through the month of May, and then you had to wait until the US July. Actually, well,
Now, before we all head off, I wanted to bring up your course. The course was super important to bring up. What do you guys offer there? And can you talk a little bit about it there, Brian?
okay. I don't want to come across as a shill, so I certainly
No,
don't
you're
want
not.
to, I'm not I built this course, and I don't know whether we've ever had this conversation before or not. And I don't know if your editor would and you want to edit this out later on, that's perfectly fine by
No, that's
me.
okay. It's okay. Go into it.
Um, but I lost my wife in 2011.
I'm sorry to hear that.
Um, and I honestly believe, this might sound a little crazy, but I honestly believe that she visited from me from the other side. And she specifically said, I had the opportunity. She didn't say I was going to, but she said I had the opportunity to make a positive difference in this world and to help a lot of people.
Right.
So please believe me, this comes straight from my heart. The only reason why I'm doing this program, like I said, I was a prop commodities trader trading on the CME. I was working with $100 million portfolios
Wow.
as investment advisor, financial planner. Um, After she passed, I took a lot of time off, and I had to seriously contemplate what I was going to do with the rest of my life. I also have a low functioning son who's 23 years old, who suffers from he's on the spectrum, ASD. If any of your viewers know what that is. Um, and the end result of all of this is this website called therationalinvestor.com. And this school that basically I teach everything that I have learned over the past 35 years
Wow.
working in the markets. We've taught thousands of people. And what's fascinating is the absolutely beautiful response from students who have actually taken this program. You're more than welcome to come to our site, and the team that we've put together has actually done just an absolutely beautiful job highlighting the program and all the testimonials from students.
Wow.
Unfortunately, there's the site getting loaded. Over the years, we've helped a lot of people all over the world, and this is basically what I do.
Wow.
And I've priced the school program so that it's reasonable for everybody. It's the comparable education program. If you went to Wall Street and actually asked to learn this, the price is tagged staggering.
Oh yeah, this is so
Uh,
much of your knowledge. This is like how many years of knowledge is going into this course?
I got my first job in this business in 1988.
Yeah, that's a lot of years of
So,
knowledge.
so the point being that what I do in a nutshell is I teach behavior. And it's interesting because I think to a certain degree, I have a special needs son. And when you're dealing with children on the spectrum who are nonverbal, which my son is, there's an old adage that says behavior is communication.
Right.
And ironically enough, for most adults that are fully functioning, it's remarkable to watch how they behave in the marketplace with their money.
Oh
They
yeah.
actually behave incredibly irresponsibly.
Yeah.
And so, what my education program is really all about is teaching you how to behave in the marketplace. What we call the process. That's what we teach.
Right.
And the great part about it is that it actually translates into your own life. A lot of the skills that we teach, patience and discipline, building a plan, holding yourself accountable to
Yeah.
how well you follow the plan, various different support tools that you put in place to make sure that you do follow the plan. I have two very basic rules of investing. And literally, the entire course is built around how you address those two rules of investing.
Mm-hmm.
And I, I'm very, very proud of the job that the team has put together, not only presenting the material in a very computer appropriate way, this
Mm-hmm.
21st century. I don't know whether you're aware. I think I told you my first job I got was in 1988 in the market, right?
Yeah, yeah, you told me.
I used to get my price charts in the mail.
Oh, seriously?
That's how long I've been in this business.
Uh,
And the charts would literally be like tissue paper. And you could, you're trying to draw like a little bar on a today's
yeah,
price action, and boom, you just
you just
punch
ripped it.
your pencil through the
Uh,
tissue paper. And darn it, now I have to wait till next month for a whole new set of charts.
that's
So
hilarious.
that's how long I've been in the business. I'm an old timer. But what's great about the Rational Investor, this website, is the whole team that we've put together. It has literally brought this whole idea, this whole concept into the 21st century in a very agreeable, very down to earth, very user friendly. The whole program itself is about a year long, but we do an introductory program. The program is based in three segments, sort of beginner, intermediate, and advanced.
Nice.
And the first program is basically all about building your plan, building out your strategic vision, where you are, how you want to approach the market, all those kind of things. And that's a 12-week program, the level one. And people who want to just get a good footing. I'm actually quite famous in one particular space within the online world for a strategy called the little old lady investment strategy. And it's all about risk management. It addressed one of the two rules that I have for investing. And actually, I've heard social media influencers say, like literally say, on video podcast. It's remarkable when you sit there and watch it.
Yeah.
One guy just a month or two ago said, just right in the middle of the video, I base my entire philosophy in the market based on this gentleman called Brian Beamish,
No, no
little
way.
old lady investment strategy. And it's like, wow, where did that
Wow.
come from?
So what I'll do is I'll put your this link and this in the description below. So everyone watching this right now, if you guys want to sign up and get into this, the link will be in the description below. Brian, it's such a huge, huge pleasure having you come down to Wall Street Silver and speak to everyone. Like all these charts have been phenomenal, and hopefully in the next week or two we can get you back on to talk about kind of what we missed out and the other charts that we can get into.
Yeah, well, hopefully what your audience hears is that as we go through this repricing event on assets like silver, um, I think that there's actually a lot of opportunity here.
Right, absolutely.
And I would love to be able to come on and talk a little bit about what I just gave you a little hint as to what I expect to see out of the gold and silver stocks going forward. And
Correct.
I live here in Vancouver, British Columbia, Canada, which is a prolific mining sector of the globe. And I think actually it's extremely undervalued. And I have about 3 or 4 different names that I absolutely love right now. I have no conflict of interest. I don't really care whether you buy my ideas or not.
Right.
And I would be more than happy to share sort of my justification as to why I'm interested in those names with your audience, maybe at a later date.
Yeah, absolutely. Well, Brian, it's such a huge pleasure. And again, thank you so much for coming to Wall Street Silver.
No, you're welcome, and thank you very much for inviting me.
No problem. Talk to you soon.
Bye bye.